Hello, good morning, everyone. If you can hear me and can see my screen, kindly type in hi in the comment section, please. Let's confirm we are all on the same page. Okay, good morning, Carrie. How are you? Hello, 799. Heaven 25. Good morning to you. Trust we're all doing well today. I need to confirm we're all on the same page. Can you hear me? Can you see my screen? Beautiful, happy. Thank you very much for that clarification. Malmeto, peace, mercy, and blessing of God. Oh, thank you, and you too, and everyone in the house as well. Okay, great, 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 great. Once again, I welcome you all to yet another beautiful session of Extreme Speed Live with my humble self, Sheriff Daramola, and I shall be taking you on a journey through the chart where we shall be evaluating price movements using chart patterns, trend lines, market structures, and we shall be using these parameters to identify potential trading opportunity as we head into the New York session. And at the same time, we are also going to be looking at the previous charts. We're going to looking at the previous pairs we discussed yesterday. We want to see how well they are doing. And then we will randomly choose some other pairs that we will be looking at after we are done. If you have any pair or commodity you think you want us to look at, you can feel free to drop it in the comment section so that I can squeeze it into my schedule for today. I trust you guys are pumped up for today. All right, right. Okay, David, hi, how are you? Okay, 605 is greeting everyone in the house. Okay, without further ado, let's dive into the charts and let's see what's happening. So the first pair we'll be talking about today is the US oil. And we had a very spectacular move yesterday. Price moved significantly well from right below our $101 area and moved about how many pips that is? Over 600 pips moved before we started seeing this move to the back up. And if you will remember vividly, during the course of yesterday's session, we saw this move. Price was right at this area. And I said, if we see a retest of that channel, that's another welcome opportunity to take advantage of that move to the downside. So if you are taking that move, kudos to you. Well done for citing that opportunity. And now we are right in the demand zone where we expected our take profit target to be. And so what do we want to do at this point? Now that price has emphasized what looks more like the downward bearish momentum. So as we head into the New York session today, what are we going to be looking out for? Well, the first thing we want to observe here is that price is right within the demand zone we identified earlier in the week. Let's label this area for the sake of clarity. We have our demand zone here. Hold on a second. Let's place this right in the middle of this box. Okay. So we have a demand zone sitting right around here, which price is in right now. And one thing we want to be looking out for is this. is price going to respect this demand zone? That is, are we going to be seeing price rally up from this area, or are we going to be seeing price break down this area to a potential further bearish momentum to the downside? Well, we want to be looking out for structures to guide our action during the New York session. So the first thing we want to be doing is this. We understand that we have this bearish trend line that has been holding price action in the last how many days that is? I think last 1 week now. It has been holding price action. If let me give you a visual representation of what I'm talking about here. So price tested this bearish trend line, came back down, tested it one more time, tested it one more time before we saw the breakout. Then price came back into that bearish trend line, came back up, and then we saw the breakdown of that bearish trend line. Now, to join the rally to the downside, there are two scenarios we want to be looking out for. The first scenario is this. Price is probably going to reject this bearish trend line to push price further to the downside, or we could see price go as far as coming into this one, do a reversal pattern, then send price crashing to the downside from that area. So this is the scenario we want to be looking out for, any bearish momentum henceforth. And what if price does not go back into this bearish trend line at this point? How do we intend taking advantage of a downtrend scenario? Well, that will mean that we have to scale down to a much lower time frame, and that means let's go down to the 15 minutes time frame. Let's see what's happening on the 15 minutes time frame. Okay, so on the 15 minutes time frame, despite the fact that price is within our demand zone, hold on a second, let's bring out our line chart. We can connect the series of higher lows at this point. And what are we going to be having? We're going to be having something like this. We have this temporary bearish bullish trend line. So in addition, so this is going to be our first parameter that will guide our action during the New York session. So what we want to be looking out for is this. The first scenario is a breakdown of this bullish trend line, a retest of structure for further confirmation. And when I say further confirmation, we are looking for reversal patterns on lower time frame. This could be your double top structure. It could be your head and shoulder pattern. And whatever that is, we're looking for that pattern on lower time frame, after which we join a decline to the downside. So that's the first scenario. So we want to be looking out for the breakdown of this bullish trend line. In addition to this bullish trend line, it's appropriate we have a key level that we will be working with. This is just to make our job easier so that we don't get caught up in a dilemma when price starts unfolding before our eyes. So we want to identify a key level that will guide our action during the New York session. And one thing we'll observe at this point, if we look at the structure here, if we look at what the structure around this area is giving us, that is this area between here, between yesterday's New York session and now, we can see that we have a structure around here which has been a supply niche around this area. We have a supply niche here. We have a supply niche here as well. And then we have one here. And then we saw a breakout of that supply niche, giving us a bullish potential. And then we have a demand area around this area. So one thing you will agree with me at this point is that this area that we just identified here is a very strong determinant of price action in the past. As anytime price comes into this area, it either rejects it or it breaks through it. So what I want to be doing at this point is to connect the series together and be using this as our key level during the New York session. So let's do just that. We have around 96.5. Okay, $96.50 appears to be the most appropriate point here. So we have $96.50. And we would always give this a golden color to emphasize its importance. So let's label this key level at $96.50. So we have it, let's have it sitting right on the top of the key level here, and then bring back our candle chart. Very good. So we have this key level here at $96.5 area. One thing we want to be looking out for at this point is this. The first parameter is the bullish trend line, which I would love to extend a little further. I would love to extend it a little further into the future, as we want to see how price is going to play out around this area. And if you look closely into the key level, it also shares a confluence with the bullish trend line here, making this area more or less a very significant area we should be looking out for. Either a bullish momentum, that is, price could continue to the upside from this area, continue to respect that bullish trend line to the upside before the downtrend continuation happens, or we might be seeing a outright breakdown of that key level, which also share the same confluence with the bullish trend line, then a retest of structure. It could be the retest of the key level, or probably the retest of the bullish trend line, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. So this is the first scenario we want to be looking out for. Considering the long-term bearish momentum here on the US oil, we want to be taking this first glimpse into the possibility that we could be having a bearish continuation from this area in the market. Now, the second scenario is this one. Despite the fact we're on a bearish momentum, remember, there is a possibility that we could see price respect that bullish trend line, break out of that bearish trend line, the red dotted line we can see on your screen, and then climb as far as into this bearish trend line here before we see the move to the downside. So for those who like scalping, you could take advantage of that using that bullish trend line as your guide. As anytime you see a breakdown, then you should know that that is a sign that price is moving against you. However, if price continues to respect that bullish trend line, then you want to be taking your scalping position and looking at probably how many pips that is from here to here. Hold on a second. From above the key level into this bearish trend line is 130 pips, and if it goes as far as this trend line, then that's you have around 350 pips to catch here. But left for me as a long-term trader, and considering the obvious that we've already made profit on this one, we want to be patient enough to see how price is going to play out, in the sense that we want to see price come back into somewhere within our golden zone area before we look out for a reversal pattern that will send price going to the downside. Now the question is, where is our golden zone area? Our golden zone area is between the 50 and the 78.6% of the previous impulse leg. So now the next thing is to identify where the impulse leg is. We have this bearish impulse leg that started at around $104.50. That was on the 11th of July, and we saw our price move significantly downwards into the $93.70 area. So what we want to be looking out for is a retracement of this impulsive move into our golden zone area, after which we look out for patterns that will send price going to the downside. So now bringing out our Fibonacci retracement tool and running it through that impulsive move to the downside, we should be aiming at between the 50 and the 78.6% as our selling opportunity zone from a long-term perspective here. So if we have somewhere around here, let's give it a yellow color as usual for our selling opportunity. So we have this area of our selling opportunity zone. Let's give it a green, and let's place it right at the center of right at the center of, okay, so here we go. So that's it. So now that's what we have here. So on a long-term perspective, we want to be looking forward to price coming into the selling opportunity zone, where we will be looking forward to a trend continuation to the downside. And if you look closely into what the structure is, if you look at this bearish trend line here, this bearish trend line I just lifted up here, you can see that that area also shares a confluence with our selling opportunity zone, which gives us the possibility that price might come into this area to do that reversal pattern we are looking forward to before we take that bearish continuation to the downside. And now, with this insight, for those who are out there who do counter trend trading, you could be looking forward to taking advantage of that move into this area, where you look out for part, after which you take your profit around this area, and then selling momentum could probably begin from this area. So that is the second scenario we are looking out for here on the US oil. So let me come again to have a clearer picture of what I'm talking about. The first scenario is this one. We are looking for a breakdown of the key level. Hold on a second. Let me bring out this key level further out a little bit so that we can have a better perspective. Okay, so we have this key level here. Let me place it at the right hand side. Okay, so we have this key level here. So with the first scenario we are looking out for here on the US oil is if price breaks down that bullish trend line, which also shares a confluence with the key level at $96.50. Remember, we are not getting too excited at the sight of a signal. We want to be patient enough to wait for confirmation in the form of a retest of either the key level, the bullish trend line, or probably this bearish trend line, where we look out for patterns on lower time frame in the form of a reversal pattern that supports a trend continuation to the downside. So that is the first scenario we are looking out for here on the US oil. And the second scenario is if price continue to respect this bullish trend line, then we want to be patient enough to look out for price coming into this selling opportunity zone, where we look out for structures that will support a trend continuation to the downside. So these are the two scenarios we are looking out for, and you will agree with me that the major perspective, the major buyers we are looking out for on the US oil is a bearish momentum. But within this perspective of a bearish momentum, those who do counter trend trading could probably take advantage of that bullish momentum from above the key level if it happens. Mind you, if it happens, you could be having around 350 pips to catch before the move to the downside. But if that does not happen, then a breakdown of that bullish trend line, which also shares a confluence with the key level at $96.50, will be a retest of structure with a confirmation on lower time frame, will be the most right appropriate place to take advantage of a bearish momentum. Now, if this has been determined, our take profit target still remains the extension of that impulse leg. If we have this, the impulse leg we saw earlier, so we want to be looking forward to the extension of this impulse leg. So the only way we can do that is to bring out our Fibonacci extension tool, run it through that previous impulse leg, and the only place we will be aiming at is right between the 127.2 and the 1414 area as our take profit target, which falls within let's see, between the $89 area and the $90 area. So let's see how price is going to play out during the New York session. With the take profit target, if we are taking advantage of from below the key level here, we should be looking at least a minimum of 500 pips to catch here. And if price goes up a little bit into the selling opportunity zone we identify as the $100 area, then we will be aiming at around at least 900 pips to catch here on the US oil. So I would like to pause at this point and let's see if we if there's anybody in the house who needs further clarifications, so that I can quickly do that before we move on to the next pair. So I'll be pausing for, let's say, 10-15 seconds and run through the chat to see if there are questions or inquiries in this regard. Okay. Okay, what's happening here? Good of you. Okay, okay, John. Hello, everyone. Hi, how are you? Evan 25 says is newbie. He doesn't understand the graph. Well, I would suggest to just have you been trading? That's the first question I would want to ask. If you've been trading before, then you might need some time to settle in into the session so you see how it works. Just watch what we've been doing, what we are doing, and then I assure you with time you get to sink into our pattern of processing here. Scott Benji, you're welcome. Glad to have you around. All right. Okay, Scott Benji wants us to do USDJPY and USDKKK. I think we did USDKKK yesterday. Okay, I'll pen that down and let's see how possible we could squeeze that into our schedule for today. So that's no problem, Scott Benji. 735 1125 says I miss. Okay, I just answered you. Okay, John Janla, it's true now, Spanish. Okay. 356, good morning to you. Good morning to you. 201, hello, how are you? John Wick, okay. I also have a perspective on GBPUSD to share with you guys. Just stay tuned. All right. In the absence of none, then let's move on to the next pair. So the next commodity we will be deliberating on this morning is on the UK oil. On the UK oil also, we were able to take advantage of that bearish move to the downside from below the key level at $104 with about how many pips that was? We took over 500 pips on this one yesterday, and we can see how price is respected that bearish trend line we identified a couple of weeks ago. We can see how price has respected that bearish trend line, and we saw our price since it tested that bearish trend line. We saw something that looks like a reversal pattern from this area, and we're not sure how far this is going to go. Is it going to go further up into the key level at $104 area before we see the move to the downside, or are we going to see an outright downside from this area? Let's see what structure is telling us. Remember, structures, patterns will definitely give us a hint into what participants in the markets are planning to do. So we have our key level. Let me readjust this. Key level. We have a major key level which has been serving us since last week at $104 area. And I'm of the opinion that there's a possibility that price could come into that key level, which also shares a confluence with that bearish trend line we identified on Monday. We'll look out for patterns on lower time frame that supports a trend continuation and probably take that move to the downside. But what if price does not go that far? How do we intend taking advantage of any momentum lining up for us during the New York session? So I think with the structure we have here on the 1 hour time frame right above that bearish trend line, the red one we can see here, what we want to be doing is to scale down to a much lower time frame to see what structure is being given us in the last 12 to 18 hours. But first of all, let's extend this bearish trend line, which has been serving us since Monday. We want to see how, oh, sorry. Okay, sorry about that. So we want to see how that bearish trend line will also assist us in making a decision during the New York session. So the first thing I will do here is to go down to the 15 minutes time frame and let's see what pattern has here. And if we look at what pattern is saying here, we have almost the same scenario with what we have on the US oil. If you look left, we can see that we have the selling niche here, We have the selling niche here. We also have a selling niche around this area. We also have one around this area. We have multiple selling niche around this area. We have one here before we saw the breakout of that selling potential. Then this area became a demand zone at this point, and it appears price already breaking through that demand zone in this area. So one thing we want to be doing here is to connect the series at this point, which you agree with me is a major determinant of price action in the last 18 hours. So we want to bring out our line chart so that we can have an exact point to work with, and we should be having our key level sitting at right exactly $100 level. In fact, it's just right on $100 level. So what we want to be looking at this week, sorry, let's bring this down a little bit. So we have a second key level right on the $100 mark. So I want to give this a purple color so that let me label this first. Key level at a $100 mark, at exactly $100 mark, and then let's give that line a purple for the sake of clarity, so we differentiate it from our major key level. So let me quickly give you a visual representation of what I'm talking about here. We saw our price came into this area. We saw it retest, reject, selling momentum. Then price came back again. Then we saw another selling momentum from this area. Selling momentum once again before we saw the breakout of structure. Price, this area became a demand zone. But right now, we have price breaking through that key level. So now, is this going to be a signal for us? Well, let's see how this candle is going to close here on the 15 minutes time frame. We want to see this candle close, and let's see if it's going to close right below the key level. Then we wait for a retest of structure and then patterns on lower time frame that will help us identify that move to the downside from here. That is the first scenario we want to be looking out for here on the UkOil. Then the second scenario is this. If we look at what has been happening since the early hours of today, we can see that price has been finding higher lows and higher highs from this area, giving us a clue into a temporary bullish momentum that you can see here. But unfortunately, as soon as price got into $101 area, it got rejected a couple of times before we saw what looks like a breakdown of structure. So this could be a double top structure, we never can tell yet. But one thing I want to call our attention to at this point is this higher lows, which I want to connect to give us that temporary bullish trend line, just like we did on the UsOil. So we connect the series together, then we have something like this. So we have a temporary bullish trend line to guide our action. So now you're counting, we have two parameters to guide our actions during the New York session. So this is what we're looking out for. So we're looking out for price respecting this. Now we saw this. We saw a breakdown of that key level, but we still need some further signal to give us that bearish potential in the form of a breakdown of that bullish trend line. If we see a breakdown of that bullish trend line, a retest of the bullish trend line or the key level at $100 area with patterns on lower time frame that supports a trend continuation to downside, welcomes a bearish momentum here on the UkOil. Now, the other scenario we want to be looking out for is this. Price might continue to respect that bullish trend line. We never can tell. So if price continues to respect that bullish trend line, well, this is for counter trend traders. You might want to take advantage of a bullish momentum at a retest of structure. And if price breaks above, then you want to continue to take advantage of that move to the upside. But if at any point in time we see a breakdown of that bullish trend line, please bear in mind that it appears the wave is about to change. So that is that. So let's go back to our 1 hour time frame to see from a long-term perspective. Now, back to our 1 hour time frame, we have this impulsive move to the downside from here. We have an impulsive move to the downside. And from a technical perspective, we all understand that after every impulse leg, we should be expecting price to do a retracement into our golden zone area. If I will remind you once again, our golden zone area is the area between the 50 and the 78.6% of the previous impulse leg, where we want to be looking out for a selling opportunity in the direction of the prior leading price action. So for us to identify that selling opportunity zone, then we have to bring out our Fibonacci retracement tool. We run it through that previous impulse leg, and what do we have? So we aim at the 50, between the 50 and the 78.6% of the previous impulse leg. And what do we have here? We have somewhere around here. Then with let's see, let's label this area selling opportunity zone. I hope you're with me. Please don't miss out on this explanation. So we have our selling opportunity zone around this area. So what we want to be looking out for on a long-term pattern, that is, if price does not break below this bullish trend line, where we see a retest of that key level to push price to the downside. And what I'm saying with what I'm analyzing right now is, if price continue to respect that temporary bullish trend line we just identified now, let me extend that trend line a little bit so that it can move into the future. So if price continue to respect that trend line, so if the trend line guides price back into the selling opportunity zone, we want to be looking for a reversal pattern within this area to take advantage of a trend continuation to the downside. Now, if we look at this selling opportunity zone, we can also see that that area shares a confluence with both the major key level that has been serving us since last week and the bearish trend line we identified during the early days of this week. We can see we have a confluence around that area. So that area appears to be a very important area we will be taking advantage of a trend continuation to the downside from here. So if you're a counter trend trader and you see that price continue to respect this bullish trend line, then probably you have about 200 to 300 pips to catch on this momentum to the upside. And for the selling opportunity, where will our take profit target be? You all guessed right. We use our previous impulse leg. We want to extend that impulse leg into the future to aim at a 127.2% extension. So what do? We bring out our Fibonacci extension tool, run it through the previous impulse leg, and we aim at where? Exactly 127.2%, between 127.2 and the 1414 area. So that is where our take profit target is going to be for this one. So let's see, that's exactly between $96 area and where is that, and $94.50 area. So this is where our take profit target will be, which dovetails to how many pips. If we are taking it right from the key level at below $100 area, we want to be looking at a minimum of 400 pips to catch. And if we are taking it from our major key level at $104 area, we want to be looking at least a minimum of 700 pips to catch here. So this is my scenario here on the UkOil. And if you are following me closely, you would agree that we have a major bias on this one, which is bearish. And we also saw a potential of a counter trade opportunity, where for those who love taking counter trend opportunity or scalpers, you can actually take advantage of a bullish momentum right from the key level if price continues to respect that bullish trend line. So this is my scenario here on the UkOil. So if you have any questions or you need further clarifications, you can feel free to drop a comment in the comment section, and I shall be taking a 10 to 15 minutes pause to read through the comments so that we can have what's it called? We can have a better understanding by explaining to you better. Okay, someone from Brazil, you're welcome around. Oh, 359. Okay, great. Okay. All right. Buy Euro USD. Okay. All right. So in the absence of no questions, I want us to move on to the next pair we discussed yesterday, which is the GBP CHF. The GBP CHF isn't moving as expected in the last 24 hours. Hold on a second. Let's see. The GBP CHF, we've been expecting a bullish momentum here on the GBP CHF, and we have a key level at 1.16500, which is supposed to be guiding our action during the week. However, if you look at what has been happening since the beginning of the week, we saw our price has come down from the 1.17500 area into the key level, and we've had multiples of rejection of that key level in the last 48 hours. And this multiple rejection of this key level is supports that bullish momentum we are looking forward to. However, it's the traction of that bullish momentum appears not to be very visible to push price to the upside at this point. And if we look at the long-term perspective of this pair, we can see that it's on a bearish momentum. And one thing I also observed later on yesterday night was that after this rejection of this level, we saw this impulsive move to the upside. We saw this high, then we saw a higher high, then price came back down into this area, and price has been rejecting the 1.17 area, giving me a clue into how the sellers have been trying to tussle this market from buyers. And if you look at the structure closely, it looks more like a head and shoulder pattern, which with a breakdown of the structure could give us a signal that a bearish momentum is very visible at this point, where a retest of structure will give us a confirmation to join the decline to the downside here on the GBPCHF. So this is the scenario I saw later on yesterday night when I realized that things are not actually going as expected. However, if price continues to rally right above that key level, we could still be looking forward to that bullish potential. But one thing I want to say at this point is this: if price continues to rally above that level, then we want to be patient enough to see a significant move from that key level to give us a signal. That is, we see a break above of the previous high. Then if we see a retest of structure, then we can join that uptrend situation that will be coming up if that happens. But if we don't see that, then we just lay low on the GBPCHF. And if we see that breakdown of the key level at 1.16500, like I stated earlier, a retest of structure should give us a further confirmation to join the decline to the downside. So this is the scenario I'm having here on GBPCHF. GBPCHF, this pair requires patience, and if you don't have that patience, you might miss out on that opportunity that is lining up here. So this is my scenario here. If you have questions, feel free to drop it in the comment section. I'll be willing to be of assistance in that regard. Okay, so let's move on to the next pair we talked about yesterday, which is the GBP New Zealand, where we are expecting a bearish momentum, and we saw a signal yesterday in the form of a breakdown of the key level at 1.94 area. Though I'm in this trade already, though I'm in profit, but we hold on a second. So we have the scenario here, and yesterday we saw this breakdown of structure yesterday. I think yesterday we saw the breakdown of structure. We saw a retest. Price came back into that bearish trend line, did a double top structure, and then came back down to break down that key level. So a retest of this key level with a reversal pattern on lower time frame should emphasize that bearish momentum we are looking out for. And if price breaks this level here, this level I identified, let me give it a purple color to clarify. Hold on a second. Okay, so if we have a breakdown retest of this level, then we want to add positions to our existing position to as we take that bearish move. So our take profit target still remains between the 1.90750 area and the 1.92 area, which dovetails to, let's see, a minimum of at least a minimum of 200 pips, 240 pips to catch here. So this is my scenario here on GBP New Zealand. So let's see how price action plays out. And okay, that's that on GBP New Zealand. If you have questions, feel free to drop it in the comment section, as I will be looking forward to be of help in that regard. Galaxy hi by P. Okay, hello. 066, help me. Okay. Okay, let's see. So that is the scenario we are looking out for on GBP New Zealand. Then let's move on to USDDKK, which is the pair Scott Benji introduced to us yesterday. And we saw a strong bullish momentum on this one. Beautiful. That's already happening. We emphasized yesterday that we're already on a strong bullish momentum, and it's very appropriate that we hold on to see price come back down into the key level. Let's go to daily time frame. Yes, we identified the key level at $7.2 area, and I told you how it is not advisable to take advantage of any move right now, as we want to see price come back into the key level area at 7.2. We want to wait for price come back into our key level at $7.2 area, where we will be looking to take advantage of a bullish momentum from here. Now, if we look at that impulse leg here, it appears the impulse leg is about to end. Sorry for the break in transmission. Okay, so since if this impulse leg has ended, that is, if we see a reversal pattern right above this place on probably on a 1 hour time frame or 4 hours time frame, then we want to be taking the retracement leg of this impulse leg, taking advantage of a bullish momentum right between the 50 and the 78.6%. Sorry. So we want to be taking advantage of a bullish momentum from this area. Hold on a second. So we have buying opportunity zone here. So we want to be taking advantage of a buying opportunity within this area. So let's wait for price to come into this area. That is one scenario we want to be looking out for. Wait for price to come into that buy opportunity zone, then we take that move to the upside from here. But if we scale down to the lower time frame here on the USDKK, we should be noticing that price is doing a retracement move. Let's do that. Let's scale down. Let me delete this so that we can see. So we can see that since price tested 7.45 area, we saw a rejection of that area multiple times, giving us a scenario that looks like a double top structure. Hold on a second. Let's give this a green. So we have something like a double top structure here, which from a technical perspective is a strong reversal pattern. Let me give you a visual representation of what that is. We saw this impulsive move to the upside, and as soon as price got into 7.45 area, we saw the rejection. We saw the first rejection, and then we saw a lower high at this point. Then that's a double top structure, which is not yet to be confirmed, as it's only going to be confirmed when we see a breakdown of that neckline, then a retest of this neckline. Then we could take advantage of a counter trend opportunity right into the key level we identified earlier. So the second thing we want to be doing here as we head into the New York session is to identify this neckline area, which if we bring out our line chart at this point so that we can have a precise point, we have this area. We should have this area, and bring back the candle chart back. So we have an area here. So what we want to be looking out for during the New York session is a breakdown of this key level of this neckline. Remember, we are not getting too excited when we see a breakdown of it. If we see a signal, we are not getting too excited. So once we see this breakdown, we wait for price to come and do a retest of structure, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. So if that happens, then we should be aiming at our take profit target, which should fall within the buying opportunity zone, where we said we'll be looking for bullish potential around this area. So with that being said, we have about how many pips to catch? If you are taking this counter trade opportunity, we have around 1,700 pips to catch here. So that is my scenario here on the USDDKK. So let's see how price plays out during the New York session in that regard. I hope I've answered your question here, Scott Benji. If you think you still don't understand, you can drop in a comment and let's look at it one more time. But if you do, good for you. Okay, so let's run through the other pair we want to look at for today. The other pair I'm looking out for today is on the you said on the USDJPY. That's what you said. USDJPY, I guess. Do I still have that here? Oh my. Okay. You're welcome, Scott Benji. So we have on the USDJPY here, it's obvious that we've been on a long-term perspective on the USDJPY. Let's see how price has been playing out from here. And as soon as we saw a rejection of 137.750 area. That is, we saw the rejection of this area. We have almost the we have a similar scenario with that which we had on USDDKK we just did earlier. So we have something that looks like a reversal pattern here. So I want to suggest to see reversal pattern. And how are we going to be going to the downside from this area is a question we don't know yet. So let's look at the daily time frame. Let's see how price has been playing out in the last couple of weeks. Okay, so the first thing we want to be doing is to connect this lows, the higher lows together to see if we can have a uniform trend line to work with. Then if we connect it, we have something like this. So is price going to respect that trend line before we see the trend continuation to the upside is what we don't know at this point. So let's scale down to our 3 hours time frame, and I want to be looking out for signals. Remember, we're looking out for signals. We don't want to get too excited here. We're looking out for signals. Then I want to see if that becomes our reversal pattern. If it actually turns out to be a reversal pattern, then our key level should be our neckline, which I just identified here at $136,700 area. Key level at 136,700 area. So let's place this right at the top on the right hand side of our screen so that we can see things clearly. So we have it there. So if this happens to be the double top structure at the end of the day, then we want to see a breakdown of the key level to give us a signal, then a retest of structure, when then we'll go down to the lower time frame to look out for patterns to take advantage of a bearish momentum, at least to this point. And that's about how many pips? That's like 150, 170 pips to catch here. Why I said at this point, because we don't know how far this is going to go. If we look left, we can see that this area at 134, 135 area has been a major demand zone in the past. We can see this area has been a major demand zone, and there is a possibility that price could come back into this area and do a trend continuation from here. So we don't want to be too over ambitious here, so we place our take profit target within this zone here. And then if we later see a breakdown of that bullish trend line, then a retest of structure should give us further confirmations to join the decline to the downside. So this is the scenario we want to be looking out for here on the USDJPY, and I hope I've made myself very clear on this one. So remember, we are not getting too excited at the sight of a signal. We want to wait for confirmations to give us that leverage to join the decline if it's really going to happen. So this is my scenario here on the USDJPY. Scott Benji, is that good? Okay. So I think this is going to be the last pair we're going to be discussing today. So on this note, I would say this is the last pair we'll be treating, and then let's quickly do a recap of what we talked about so far today, and then we call it a day. If you have questions, feel free to drop it in the comment section while I run through the pairs we talked about today. So the first pair we shared today was the UsOil, and then we did our analysis on the 1 hour time frame, where we were expecting a major bearish bias. However, we cited a scenario where price could probably respect that bullish temporary trend line that we've identified here. And hold on a second. We identified this temporary bullish trend line that there is a possibility that price could climb into the same opportunity zone, which appears to be our golden zone area. And our golden zone area is the retracement, the 50 to 78.6% retracement of this previous impulse leg, where we are looking forward to a reversal pattern that will incite a trend continuation to the downside. And then the other scenario I explained here going into the New York session is we have a key level sitting at $96.50, which shall guide our actions, as if we see a breakdown of that key level, which you can see also shares a confluence with the bullish trend line, then we want to take advantage of a retest of that structure and take advantage of that move to the downside. So our take profit target still remains at between the $89 area and the $91 area. So it depends on where you entered from. If price go as far as going to the selling opportunity zone, we will be having around 1,000 pips to catch. And if price continues right below the key level we identified at $96.50, then we should be having at least a minimum of 500 pips to catch here on the US oil. Remember, a breakdown of this key level is only a signal. We don't want to get too excited. We want to wait for price to come back and do a retest to give us further confirmation in that regard. And if the confirmation does not happen, please pass the trade. We are already profitable on this one. At least we took a move from below $102 area yesterday, and we were profitable of over 500-600 pips. So let us be mindful of how we manage our position. So we moved on to the UK oil, where we explained the same scenario we are looking out for, and to help our decision during the New York session, I have identified the key level at $101 area. I made mention of that. In addition to this bullish trend line, if price continue to respect that bullish trend line, you want to hold on for price to come into the selling opportunity zone area, which is at exactly $104 level, to take advantage of the bearish potential. However, I made mention of an opportunity for counter trend traders who might want to take advantage of a move from right above that key level into this area, and that is only if price continues to respect that bullish trend line. Then if price breaks below that key level at $100 level, that is, we see price break down the bullish trend line, and at the same time that key level at $101 area, we don't want to get too excited, as this is just a signal. We want to wait for a retest of that structure, look out for patterns on lower time frame to join the decline to the downside. So where is our take profit target for both scenario? Our take profit target remains between the $94.50 area and the $96 area from this point. So let's see how price plays out on this one during the New York session. And we moved on to talk about the GBPCHF, where we are still in a dilemma on the GBPCHF as price continued to reject the 1.165 area. However, I made mention of an opportunity lining up for us if we see a significant breakdown of this key level at 1.165 area, a retest of